Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Domino's Pizza, ticker symbol DPZ. Domino's Pizza is a pretty straightforward business. It's a pizza chain restaurant, and when you're buying the stock, you have to understand that you're essentially buying the rights to the franchises. Franchisees are going to be paying you a royalty pretty consistently. As long as they're able to continue to open new stores, the stock's going to be able to increase its free cash flow. And I think that this stock is unique when compared to a Starbucks or a McDonald's or something like that, in that while it doesn't necessarily have large amount of cash to compete in the same way as these other chains, there's a lot of growth to be had with this stock. I think that they're going to be able to continue to build new locations, franchise out, and I just want to see if the value of this stock is actually lower than what I'm projecting, because if stock is on sale, I think that this could be an amazing buy just because it's a very straightforward, easy to understand type of business, and it's not something that's extremely complicated. I can understand very easily how Domino's Pizza makes money, and if it's undervalued, I think it's a no-brainer to buy. This is very similar to my stock analysis video on Prologis, where I looked at the stock and I thought that the stock was very straightforward, easy to understand. If you want to know, they're a warehouse logistics real estate company, so they actually own warehouses. And I think Domino's is the same type of business where it's very easy to kind of understand how they make their money and where the cash flow is coming from. So if you value it and it's significantly undervalued, then there could be a really easy way to potentially make a lot of money into the future if you're willing to hold. Domino's is currently up 10.94% over the past year. It has a market cap of $16.36 billion, a price to earnings ratio of 29.02, which seems on the higher end for a fast food chain, and an annual dividend yield of 1.27%. So you are getting a pretty significant dividend per year. The 52-week low is $396.06, and the 52-week high is $542.75. So it's kind of in between the lows and the highs. It's very near kind of the average of where it was. So it might actually be a good time to get in. Looking at what the analysts are saying, you have 34 total analyst price targets, with the majority being on the buy side, but you still do have 10 rating it a hold out of those 34, and it looks like 2 rating it a sell. The analyst price targets range anywhere from $402 to $559. The current price is obviously, again, $474.20, and the average price target for Domino's is $480.29. Here I have my weighted average cost of capital of 5.78%. Domino's currently has 24.19% total debt weighting, which is actually lower than what I expected. I thought it would be in the 30s or 40s, just because it's typical for smaller cap companies to finance more with debt than they do with equity. But you can see here that the equity weighting is actually 75.81% of the total market cap. Domino's Pizza is in like a very good position to be able to sustain this debt. There's not a problem of extreme debt on the balance sheet or anything like that. I think that this is a very manageable amount of debt, and their cost of debt after tax is lower than their cost of equity. So I would welcome more debt if they need it. It doesn't look like they really do need it. I think that they're growing organically pretty well, and we can see that in the revenue up here. So the revenue on average is growing at 3.21% a year, which is pretty good, especially for a chain like Domino's. You want to see that revenue is growing at a pretty consistent basis, and I think that there is a lot of growth going into the future. We have to kind of look at what the expectation is for this to be near fair value. I computed an average growth rate of the next 9 years of free cash flow at 7.5%. I've also included that weighted average cost of capital that we found for our discount rate at 5.78%, and a perpetual growth rate of 2.5% going into the future. Domino's, with these inputs, would be valued at $484.02. What I think about Domino's is that it completely depends on your investing philosophy. I think if you have a very long horizon for investing, I think that this could be a very good buy. I don't think you're getting an amazing deal at this price necessarily, but I think you're getting a very fair deal for what Domino's is. And I think that you can look at this just historically, they've been able to open more stores, which makes them more money. They've invested a significant amount in share buybacks, so that's always good for investors, right? If they have a bad couple of years and you just continue to hold, they're still going to be able to grow. I think that this stock has a lot of future growth. So if you have an issue in your portfolio of not having enough growth, but you still want a stock that's relatively safe, I think that this is a relatively safe bet that this is going to consistently grow over time. But I don't think you're getting like an amazing deal is going to 10x anytime in the future. I think that this is going to be a slowly upward moving type of stock. I think that this is a decent time to get in because I think it's near its fair value. But again, I think it's very close to what its fair value should be. And when we put in, let's say it's a 5% average growth rate of the free cash flow, then the stock is only valued at $374.75, which would represent a 20.9% downside in the overall value of the stock. And if we go over here and move it to a 10% growth on average of the free cash flow, then you're getting 29.63% upside. The amount that they're able to grow their free cash flows is very significant. And I think that there will be growth in the future, and I think that they're also going to be continuing to get more efficient. I think that AI is going to boost the entire economy, so I think it's kind of a moot point to argue that they're going to benefit more than another pizza brand or another company. I think that they're going to get the average boost from AI, and we're going to see how that kind of plays out in the future. So I think it's kind of meaningless to speculate on how AI is going to change Domino's Pizza in particularly. They could be a better adopter than some of the other pizza chains, but they could also be a worse adopter, and it could hurt them compared to other pizza chains, right? But I think that this is just a very solid, good defensive type of stock, because as long as they're able to open new franchises, they'll just collect the royalties. And as long as the franchisees are selling plenty of Domino's Pizza, you have nothing to worry about as an investor. However, I do want to say that this is not financial advice, obviously, and I'm not a financial advisor, but I think that you could definitely justify buying into this, but you could also definitely justify not buying into this, right? I mean, it just depends on what you want as an investor. If you're looking for something with potentially more growth and better margins, I think that tech may be a good answer, but a lot of people don't want to buy into something they don't fully understand, and I think that this is a very easy business to understand with a relatively low market cap compared to a lot of other companies in the S&P 500. You get a decent dividend. It is a little bit on the pricier end, I think, for expectations, but I think in the long term, this stock is going to perform very well. I really like the type of stocks that you can buy into at a fair price. I like the ones that are very cheap more, obviously. Stocks that you can buy into at a fair price and just kind of hold forever and collect a decent dividend and compound your return. Always a good thing to have in your portfolio. And I would even consider this, I think at the 450 level, I think that this is a good play to get into. If this stock dips back to 450 or 400, I would be looking at it. Obviously, if there's new earnings, this could change the value that I'm looking at. It could be worth more, it could be worth less, right? So at the time of recording, me looking at Domino's Pizza, I think that 450 or 440 would be a relatively good investment. I think that that's a very cheap price for what you're getting compared to expectations, because at the 440 level, 6%. It's right there. So maybe 6.5% free cash flow growth. So that gives you a little bit more wiggle room. And I think that this is going to just continue to grow. Maybe not at the rate that these expectations are at necessarily, but with higher free cash flows, that's just going to increase the value of the business, because obviously the value of a stock is based on the future free cash flow. And if the free cash flow is growing, then that means that the value of the business should also be growing. So if the stock goes down and dips to a little bit of a lower level, I could definitely justify seeing myself buying this stock. Again, that's not financial advice. You should always do your own research before buying anything. But just historically, Domino's Pizza seems to have been able to add more restaurants and collect more royalties, and they're doing the right things. They're buying back the shares, like I said. They don't have a lot of debt, and revenue seems to be consistently growing on a year-over-year basis. And I think that they're going to be able to just snowball up from here. And I like the business. I think the business is very solid and it's easy to understand. It's not a stock that you really don't understand what you're buying. It's fundamentally very easy to understand. I mean, the franchisees are going to pay you, and the existing franchisees that are doing well are going to stay around, and you're going to continue to see growth of new franchisees entering, and that's going to continue to pay you. Overall, I think that this could be a buy if it was a little bit cheaper, but for my own personal portfolio and my own personal opinion, I think that this stock is a little bit pricey, but I could totally justify someone buying in at this price because I think that over time you're going to get a decent return on your money. It just might take a quarter or two for you to be at the point where you got a really good deal, right? That's kind of my review of Domino's Pizza. So let me know what you guys think in the comments section. Do you think that this stock is overpriced? Do you think it's underpriced? Do you think it's at the fair value? Like kind of what I'm thinking, where it's probably close to its fair value. And if you're looking for something with high growth that you can understand very easily, I think that this would be a good selection for your own portfolio. Let me know in the comments section down below what you guys think. Thank you so much for watching the video. Please hit that subscribe button. Bye.